Good evening and welcome to the weekend edition. My name is Peter Resnicek from ShadowTrader.net. I have a fantastic show planned for tonight. Lots to talk about, really excited about it. We are going to break down exactly what is going on in the bond market right now, because I keep getting tons of emails about this, asking about why are bond prices falling when the Fed has actually cut rates. Then we're going to move into what I call a masterclass in options. Literally, you're going to get so much value out of this, I hope. We're going to break down a play of the week this week that we took on Tesla after the big earnings pop, which I think you're going to find very interesting and educational. And I've got a ton of trade ideas to share with you for next week. I have not one, not two, not three, but actually 6 #1 draft picks to share with you. All right, so without further ado, let's get into it. As I was saying in the introduction, I wanted to spend just a few moments together, if we could, talking about the bond market. I'm getting a lot of emails lately asking about simply why are bond yields rising so much and bond prices are falling when the FOMC recently cut rates by 50 basis and they seem to be on a trajectory to cut a little bit more. And this is really an important concept to talk about, because you have to understand that even though we spend all our time analyzing what's going on in the equity market and in the options market, in reality, the bond market dwarfs both of these markets together. The bond market is like an ocean and stocks are like a little drop of water. And the bond market is really the domain of very, very sophisticated, large players in the market. It doesn't really have that smaller retail presence in it. So I thought we'd just go over a couple of notes here that I made pointing to why these prices are going down. And if you do a little research on this, you'll probably find more things than this. But I wanted to talk about the 3 main things that I think are the most important things that are weighing on bond prices right now and yields going up. So what I wrote here is #1, and this is kind of in order of importance, to me at least. It can be debated. We can discuss in the comments if you like, but inflation expectations, basically. Longer end of the curve is more sensitive to the expectation of future inflation. And that's what we're talking about when we talk about the 10-year yield, or something like ETF TLT, which tracks the price of long bonds, right? So what we're seeing when we talk about the 10-year yield, which is part of that longer end of the curve, it is definitely more sensitive to the expectation of future inflation, and those yields rising tells us that the market is actually expecting more inflation, that perhaps it's not as tame as we thought or is more sticky. And then beyond that, if that is the case, remember that investors will demand higher yield to compensate for those fears of inflation expectations moving higher. Beyond that, technicals. This is what I think is very important. I think this is something that is completely overlooked by most people. If you notice what I wrote here, from April 24th, which was the low in the bond market recently, to September 17th, that rally was a 16% gain, just slightly over a 16% gain. So I think there is a chance here that larger traders took some of those profits off the table because the bond market already priced in more cuts than it thought it was going in. It was sort of priced to perfection and took it higher. And remember, as I was saying earlier, the bond market is the playground of big money. Retail is not really here like stocks and options. Did profit-taking contribute to the initial spike in yields higher? I think potentially it did. So just think about how large that rally was, 16% from trough up to the recent peak, and that could be definitely a factor, because obviously as larger players sell bonds, that causes yields to rise because these things are inverse. Lastly, and this I wanted to mention as well, because it really kind of is something we should be thinking about in the bigger picture, not only for the rest of this year, but kind of into 2025, and that is a simple fact. Is the debt starting to matter? And when I say the debt, I mean the $34 trillion that the US government owes right now. And I specifically wrote, it's not a thing until it is a thing, and crises brew for years and then blow up in weeks. And what we may be seeing is that slow sort of burn here, as again, back to the first part here, investors are demanding higher yields, right? If they have higher inflation expectations going forward, but they will also demand higher yields if they are nervous about this debt situation. So there's just some things to think about, and understand that what the FOMC does every 6 weeks is different, or I should say separated really, because it's more of an overnight interbank lending rate to what's going on here in the bond market. This is really what matters, because for all of us, quote unquote, regular people, our mortgages and things like that is more tied to the 10-year. So it's these bond yields that really matter more to us rather than what the Fed is doing every 6 weeks to raise or lower that particular rate. So very, very important stuff. I would say keep an eye on this market. It's going to be very interesting to me as we close out the year and move into 2025. Are we going to continue to see a slide in bond prices and yields going higher? If you've been watching some of the names out there, like the bigger names like Paul Tudor Jones and others, these are people that I have a lot of respect for, that have been pretty good on market timing, obviously have made billions of dollars in trading. And a lot of these people think that bonds are actually going to be sliding lower. Stanley Druckenmiller, who was an apprentice, so to speak, of George Soros back in the day, he said the same thing. So there's some relatively big players out there that are betting against the bond market. And I honestly think those are the type of people that you should not basically go against. So we'll see what happens. So watch bond prices in the end of this year and also going into 2025. And they could easily continue to slide much lower, which of course is going to mean higher yields as well. Time now for my favorite portion of the program, which is what's really going on, which is essentially a close look at the charts of usually the S&P and the NASDAQ 100, giving us an idea of what happened in the past week and also, more importantly, where we think things will go in the coming week. And this week was really kind of a head scratcher. I think if you did not choose your entries wisely and be in the right stocks at the right time, this was not an easy market to trade, because it really did a couple of technical things that didn't make a whole lot of sense and kind of probably threw a lot of traders for a loop. Let's take a look over here at the daily chart here of the S&P 500. I want to point out just a couple of key nuances here, which I've already circled on the chart, and that is simply the fact that this low here, or I should say these two lows right here, they were pretty much equal. And over the course of this week, on Wednesday, you had a large expansion of range to the downside. You took out those two lows, but more importantly, you also took out the 21 EMA, which is the green line. And this is interesting to me because this, to me, should have set up a larger move to the downside, but the market was not able to find any stronger sellers behind what was happening at all. And notice that that downdraft really only lasted one day, took us right back, and here we are just kind of chopping around, moving around the 8 EMA and pretty much kind of going sideways. Today, on Friday, as I'm recording this, was a relatively strong day early. We know we had a gap up, but then the markets just kind of fell from there and didn't do a heck of a lot. So that's what's causing this kind of choppy pattern in the S&P. I think a lot of this is keying on the fact that we are coming into the election. I think the market knows this is important. It doesn't seem to be pricing in anything in either direction as of yet. It's just a lot of sideways. I would expect that we're in for some more chop into November 5th, and then we'll get some resolve and figure out where the charts are going after that. On to the NASDAQ 100, of course, the second important market that we always talk about. Before I even get into this chart, I want to talk about the fact that we know this has been lagging for a while, right? We can see that in the chart that we're nowhere near the all-time high, but we know the S&P came to the all-time high. I want to just put something forward right now, if I could, about the potential for the future. Remember, if we are going to look at a situation where inflation is going to be sticky and actually moving higher, bond yields moving higher, et cetera, this is going to be inflationary for paper assets as well. And I believe that technology stocks, of which many of them are concentrated here in the NASDAQ 100, will do better. Generally in that environment, it's going to be things like tech, it's going to be Bitcoin, and it's going to be gold. Bitcoin is close to 69,000, just kind of hanging out there. We know what's happening in gold, and as far as equity is concerned, if that's the scenario in 2025, don't be surprised if you take out this all-time high in the NDX, go higher, but also have a lot of relative strength on this side, and therefore the play in equities is going to be more tech-focused than it is more on discretionary staples, you know, energy, etc., of the stuff that's more S&P related. So I'm just kind of putting that out there as an advance heads up. But while we're here on the chart, let's talk about this NDX daily that we have in front of us, where we're at. Same type of chop as in the ES. Obviously, this is our target going forward to see if we can get to the all-time high. Kind of a nasty reversal candle today on Friday. As I've always said, I'm not sure how much weight I put on that on the smaller time frames, like up to a daily. I've said many times that if I'm going to play something off of a hammer or a tail, I want to be looking at it on a weekly or a monthly. So just it is what it is. You've got obviously a reversal bar, shadow to the upside, but in my experience, it doesn't pay to try to short these bars on a daily. On a weekly, it matters more, and again, on a monthly. 8 EMA is starting to go sideways. You're still wedging in here, so everything is fine as long as you stay in the wedge. I think honestly, this market is doing the same thing as the S&P is doing right now, waiting to get that election behind us, resolve that issue one way or the other, and then see where we go from there. But again, keep what I was saying in mind for the future. If we're going to be in that inflationary environment, I think at some point we do break higher, and again, that's going to open the door to a lot more gains in 2025 in technology stocks and therefore NASDAQ 100 as well. Time now for a little options masterclass. This is the play of the week. As I was mentioning, every now and then I do a play in the weekly options advisory that I think is so super educational in the way that the play was laid out, why we did it, how we managed it, and how it all closed. And this is definitely one of those plays. And this one is in Tesla. And of course, they reported this week, but that's not what's more important. What's more important is what Tesla was doing before they reported, right? Which is right here on the daily chart. I've taken some snapshots here so we could do this together here on this screen instead of going back and forth. I think it'll just be a lot easier. So I want everybody to draw their focus here to the circled area here, which is the long consolidation. This was about 10 sessions in Tesla where the stock absolutely did nothing. Very, very tight range, compression. I like to use the word pressure. Anytime you see stocks, especially a tech stock that everybody knows about, that's popular, that does a lot of volume, has a really deep and rich options market. When you see a stock like that going sideways, the hair on the back of your neck should stand up because it means that opportunity is coming. There's no opportunity at the moment. As long as you're in that area, there's really no opportunity. But when you start to move out of that area, that's when the opportunity lies. And that happened here on Thursday, because you can see in the big body candle once the stock reported earnings. What they said, what they were, meaningless. To be honest with you, I don't know. All I was focused on was the fact that the stock was opening here above 240, and I knew that this consolidation was here, so I knew that there had to be a play, and more than likely that play was going to be the upside. And obviously, since I'm an options player, I was going to be taking advantage of huge implied volatility, still pumped up from the earnings, still there. The remnants of that are always there the day of. Just understand that when a stock reports, obviously the IV is climbing up into the report, but the IV is almost always there in the morning after they report. The remnants of it are there. It doesn't fall apart right away. You can watch this very closely on your platform. It starts to eke out slowly. In this case, I knew that there would be a lot of implied volatility and pumped up call premium targeting this 270 area as soon as the stock gapped up. And you can see that as soon as it gapped up, there was almost no corrective activity coming down, and it immediately started to rally. So right on that day, I knew that we had to be long something targeting that 260 area. So how did we do it? Basically, we put on these spreads right here, and I'm going to have another chart behind this, or I should say another graphic, that's going to explain these plays to you in a much clearer manner, so just bear with me, but we'll just go through for a second what exactly was done. The entire play was done in 2 days, which was Thursday and Friday. So it was October 24th on the morning after they reported, and October 25th. First thing we did is put on 4 units of a ratio spread, as you can see here, buying the 260 call and selling 3 times as many 270 calls, and we did that for a debit of just 12 cents. So just think about that for 1 second. The stock is up. The odds are very strong that we're heading to 270. We have now opened up exposure to a $10 gain for 12 cents. Because a lot of people often ask me the question like, why do you overcomplicate it? Buy the 260, 270 vertical. Okay, but that would have cost about $350 with a max value of 10. And what if the stock doesn't keep going up? What if the euphoria off the earnings kind of comes back in? Obviously, given the pattern, breaking out of that consolidation, the odds were pretty strong we were going to run. but we don't know that. And that's why I like to structure like this, okay? Then that same day, which is on Thursday, the stock starts to run. When a stock starts to run really hard and you are in a 1-3 situation that's relatively close by, there is danger that you can get run over. So what do? I start to close right away, and I close half of it. Interestingly enough, I send out alerts saying, look, it's now 62 cents credit to close. This is within hours, okay? It goes up basically 5 times what our cost was, and you can see here that I then close half the position for a 62 cent credit, and I take that 62 cent credit and I buy a 275 call. And as I explained in a moment, when I get into the next graphic, you're gonna see this much more clearly on how the structure was unfolding over the course of the 2 days. But all you need to know right now as far as that is that if you need to make an adjustment in the options market, right, because you feel like perhaps you have some exposure where you have upside risk because the stock is moving up too hard, or you have downside risk if it's moving down. If you have long calls in front of your short calls, it makes sense to harvest a portion of the position for profit and take that money and spend it on protection on the other half of the position. And that's exactly what happened here, in that we closed half the position and used those proceeds to buy 275 calls 4 times at 33 cents. And obviously 2 times 62 cents and 4 times 33 cents basically negates itself, okay? After that, what we were left with was a 132 structure, butterfly, and all we had to do was wait Friday and sell that into strength, right? And if you can see right here, you can see we sold one for $4. Remember, our cost was 12 cents. Turned it into $4, and we sold the other one for $5.10. And if you look at the graphic right here, this explains it all in much clearer manner of how it was. On the left-hand side, I've written the strikes of the calls, and here are the particular trades one by one showing you their costs. So again, going back, if you recall everything I just talked about, what was the first position? Ratio spreads 4 times, right? Bought the 260s, sold 3 times the amount of 270s for how much? 12 cents. Cost us 48 bucks. Then made the adjustment, reversed half of it here for a 62 cent credit, brought in 124, spent that money on buying 4 275s. Why did we buy 4 275s? Simple. What is the distance between 260 and 270? $10. But I've got an extra 2 shorts here, right? I have 1 long and 1 short makes a vertical, plus an extra 2 shorts. Think of a ratio spread that's a 1/3 that way. Think of it as a long vertical and 2 extra naked calls sitting on top of it. So if I have $10 long here, but I have 2 extra shorts here, right? What's 10 divided by 2? It's 5. So that means that I need to add extra contracts, right? 4 contracts at 275 to cap that off. Now, if Tesla went to the moon and went to 290 on me, I would lose nothing. Why? Because I make $10 here and I lose 2 times $5 here. See what I'm saying? So that's how that all works out. You have to be kind of thinking in advance. This is a chess game. This is not checkers. This is a chess game, okay? So we do that and we spend the money and we spend $132. 132 minus 124, barely anything. We're still basically a break even. Our entire cost here is still almost nothing, right? About 30 cents a contract, if that, right? And then comes Friday, and all we have to do is harvest, meaning we are left with 2 unbalanced butterflies. Now the structure is +1, -3, +2. And all we have to do is sell those 2 units, right? And you can see here, into strength on Friday, the stock was strong. Early in the morning, as we moved up into the long strikes around 265, 266, I sell 1 for $4. And now the question is, what am I going to do with the last one here? Can I get it all the way to max value, which would have been 10, but we only got 510 and sold it for 500. I actually made a mistake here. This should say 510 or $510 because we sold for 510, and the net gain was here on the 4 units, 854. But remember, the key is looking at these prices here, $4 and 510. What was our initial cost? 12 cents, right? And if we go over here, I've purposely put this slide up here together of the 5-minute of Tesla on Friday showing why did we actually exit at 510 when at the end of the day we could have gotten almost 10, right? The close was right up against the short strike, right? It was the best possible place. It was absolutely perfect. It literally went to 270 on Friday's close, but I wanted to show you this so that you understand that all of the exits are very mechanical. Okay, when you've traded a long time like I have, you're always playing the odds. You never play the hope card. And the reason that the spreads was sold at 510 was right here in the circled area, because the yellow line is the VWAP. This is the volume weighted average price. And look what happened here. 1, 2, and now you retested it again. It was actually the fourth test really, because these came very close. Then this candle came to VWAP. None of these candles broke VWAP, but this candle broke VWAP. So I don't know at this moment that it's going to turn around and go back up. But if a stock comes down and tests the VWAP for the fourth time, you got to be out. So basically I bail on the spread at 510, but had we held on, it went all the way to 268. And that's really, really important. I'm hoping that this is extremely educational, especially even this part, because these sorts of nuances are things that longer term traders who are in the swing, 2 to 5 to 2 week time frame don't think about a lot. But it's very important to understand that to really maximize your entries and your exits, you have to have some day trading skills in your arsenal. And this is a day trading skill, meaning that this is a very nuanced thing, looking at the volume weighted average price on a 5-minute that most traders that are longer term would never look at, because they're just focused on price, right? The average trader is going to look at this spread and say, oh, well, if the price of the resulting spreads falls down below $4, I'm going to get out. Or when it goes up to 6, I'm going to get out. But that's not really a smart way to trade, because you really have to let the chart drive what's going on, essentially, okay? So that was the exit there at the VWAP on an intraday basis at the 510 right there. Before I wrap this up, I wanted to just show you a weekly chart at the close, because it was such a strong close in Tesla. I wanted to talk a little bit about the potential of what this stock could do going forward. Obviously, this is a trade that's already done. You can't participate with me in this one. Everybody made some money. That's fine. When that happens, it's important to forget about it and move on to the next trade, right? Like I always say, you don't learn so much from your winners. You learn everything from your losers. This trade, I feel, was educational, even though it was a winner, because there was a lot of nuance to it in the structure, and it was kind of an advanced options kind of way of structuring it, so it's important. But I wanted to leave you with this weekly chart just to discuss what could happen from here, because I think that the stock is actually setting up for a bigger move now because of these weekly bars. And I purposely boxed this off here to show what I often refer to as a seller's shut-off pattern, right? Seller's shut-off is simply when one bar engulfs multiple prior bars that were moving in the opposite direction. So notice that you've got 2 weeks, really 3 weeks if you count that little doji there, 3 weeks of down action, all negated by one up bar. And notice that the one up bar here ties in perfectly with the prior 270 resistance, and then I purposely circled this, which is at 300, and that's the next resistance level. So basically, I think that there's going to be more upward movement in Tesla going forward, and I'm probably going to be looking at this as a risk reversal play, which means what? I will be short puts and long calls, probably looking for something relatively big in here, like a 275, 300 vertical, or a 270, 300, 330 butterfly. Lots of different ways I can structure, but the bottom line is, if it's Shadow Trader, if it's me, if it's Weekly Options Advisory, I'm going to probably figure out a way to do it for free. Meaning, if I'm going to buy those call spreads, I'm going to let the options market pay for it with some short puts. So we'll see. So watch Tesla going forward. I think more upside from here. More than likely 300 is going to be the target relatively soon. In the interest of providing more and more value in this show, if I could, I've got a lot of trade ideas for you. Usually in this part of the program, I leave you with just one trade idea. That's why I call it the #1 draft pick. It's essentially my best idea for next week. And it's usually something that's optionable, and it may or not end up in the Weekly Options Advisory. This week is a little bit different. I actually have 6 trade ideas for you. These are bullish charts that I really like from my universe of stocks. Not all of them are optionable, and and some of them have very wide spreads in options or low volume, so just keep that in mind. I'm putting this out there more as a pattern recognition exercise of charts that I really like, that I think are poised to move higher in the weeks ahead. Okay, so let's check out what these names are right here. These are the 6 stocks I'm going to be going over. We're going to be talking about BlackRock, Illumina, KLA Tencor, Wingstop, McDonald's, and Intuitive Surgical. Let's move over here and start with BlackRock. BlackRock is the first one I wanted to talk about. Basically, a relatively gentle pullback. This is going to be moving with the XLF. And if you recall, in last week's show, we talked about financials pulling back a little bit. They kind of went sideways for the beginning of the week and then went down pretty sharply. And obviously you see that here reflected in the BlackRock chart. But since then, what has happened? I think it's a relatively benign pullback. The volume seems to be decreasing on the pullback, and you're sitting right on the 21. Now, you do have some trendline support here, so the stock, if it wants, it can certainly go lower, but I will be looking for some sort of reversal here at the 21 to turn this thing around, break trend, and move higher. Ticker is BLK. Next one on the list is Illumina, ILMN. Similar situation to BlackRock, where we've got this nice pullback happening right here to the 21. I always like it when a stock comes into an area of demand, and we know that these 21 EMAs are generally areas of demand. I like it when we come into those areas of demand and start to make dojis. That tells you that there's indecision at that area, and more importantly, that the selling is abating and buyers are starting to take over. Some people refer to this as changing of the guard, and I love that phrase because that's essentially what's happening. And I think what we may be seeing here is that changing of the guard from sellers to buyers, and you can see how the range is kind of tightening a little bit. So easy to kind of draw the trend line here connecting the tops. That would be an obvious play higher or over the Friday's high, which is kind of the same thing. But again, Illumina looks like another one to me that is poised from some higher prices. ILMN is your ticker. Time now to move into the semiconductor space with CLAC, aka KLA Tencor. This one's a little bit more interesting in that a little bit of a different chart pattern, kind of basing at a recent low. If you recall, there was some negative news recently from ASML in the semiconductor space. That stock got absolutely destroyed. It bled into a lot of these other names. So you've been seeing a lot of weakness, I'm sure, in AMD, et cetera, SMCI. A lot of these companies have been really weak. But what I'm concentrating on is that building of pressure here. And I've purposely drawn this blue line here in CLAC to show you that you've got this support point here, right around this 685 level. And notice that the strong selling took it below that area. But since then, all we've done is go sideways. So to me, that's kind of setting up more for a long than a short, because it is classic technical analysis 101 that everybody should know, and that is the fact that long bear flags almost never break lower. And everybody seems to get this wrong because they see this pattern and they think that the next move has to be to here, but it's usually not, because if the next move was going to be to there, it wouldn't spend this many days going sideways. It would spend 1 to 2, maybe 3 days going sideways, and then it would drop. So what I'm looking for is a move above that line to push KLA Tencor higher. They are going to be reporting earnings relatively soon, as are perhaps some of these other stocks, so just keep that in mind. Remember, you don't want to get caught in any of these patterns ahead of a report, because that could obviously, send things in the other direction. Nobody really knows how stocks are going to act on earnings, so make sure that you've got that out of the way before attempting a lot of these names. But again, this is a great pattern for everybody to learn and understand, basing at lows after a protracted higher volume move down. If that base is long, the resolve is usually to the upside and not down. My next stock is Wingstop, purveyor of chicken wings you may have heard of. And this pattern is interesting to me because you have some pretty strong support right here, which is coming in at about 341 area. Notice that you've got a low here and a little bit of an undercut of that low. What I'm thinking about in this stock is a potential return to that 341. So I don't think this is long yet, but I'm going to be watching here and sort of waiting in the wings, so to speak, no pun intended, for a pickup on Wingstop at around that 341 area where we have supported before, and I do believe we'll support again. So this ticker is WING, and it's Wingstop. Time now for ISRG, Intuitive Surgical. These are the makers of the Da Vinci surgical robot. Really interesting stuff if you're not familiar with it. India, Sierra, Romeo, Golf is the ticker. Big body candle on the earnings report right here. And this is important because look at how big the volume is here. I'm a big believer that earnings gaps, especially when they're earnings gap and go and close strong, usually do not fall down into the gap at all. They usually go higher. You can see we're still holding the 8, so we're above that. That would probably be an inflection point, but basically similar to that earlier chart, that I talked about, where when you're coming down, you want to see indecision, you want to see the changing of the guard. Look at how it's coming down. It's all dojis. There's no big body candle here. There's no expansion of range. So it tells me that what's happening here is the stock is just digesting the gains off the earnings report, and at some point is going to move higher. So I like this pattern. They've already reported relatively expensive stock. Just the move from here up to about 523 is about 10 bucks, but I'd probably be looking for more on an entry, looking to take out that prior high and move up higher somewhere here closer to the 540, 550 area. Okay, again, so ISRG is the ticker, Intuitive Surgical. Last but not least is McDonald's, aka Mickey D's, or MCD. Michael Charlie Delta is the ticker, and this one I specifically wanted to end on. This is, of course, the E. coli play currently. If you haven't heard, some raw onions in quarter pounders have caused some people to get sick, unfortunately, and that has knocked down the price of the stock. However, what's noteworthy about it is that on the big gap down here, it actually rallied a lot. And this is also noteworthy because Weekly Options Advisory, I would like you to know, on that particular day, which was obviously Wednesday, on that gap down, we took advantage of the huge pump in implied volatility. We sold some far out of the money puts here, and they went to zero very, very quickly. As the stock rallied up to 300, then held that level, we ended up closing those puts for like 2 cents, which was wonderful. Since then, the stock has turned around, as you can see, and it looks like it's retesting that low. To me, this is a short. So this is the 1 out of the 6 plays that is not a bullish play. It actually looks like a bearish play. I would say the caveat here is the fact that they are going to report earnings very soon, so you may want to revisit this chart after that is out of the way. But it does seem to me like the stock wants to move lower because you will have now almost made a 100% retracement, right, of that up move, basically in that 1 bar. So watch to see how things act right in here around that 292 to 290 level. And again, I think the stock has some potential to move lower. But again, earnings are coming. Let that get out of the way and maybe reassess this chart soon after. And that's my show for this week. I truly hope that it was educational and informative, and most importantly, salient and actionable, because that is always my goal with these shows, is to leave you with some information that you can use in the coming week to make some money, all right? We recently had this event that I want to just talk about for a second. This was Wednesday, earlier this week on October 23rd. Thank you to everybody who joined our open house. This was the Live Trading Suite open house where all of our traders here that are in the stocks and options room and the futures room got to take about 10-15 minutes each and showcase their strategies, some recent trades, show off their track records, which is always very, very important. And there is a recording of this in the description of this video. So check that out. If you weren't able to go in person, check it out. And remember, watch the video to the end because it does include that special coupon code for a discount on the Live Trading Suite. All right, moving forward, the next 2 weeks are going to be very eventful, so be careful. There's a lot going on. I put together just a short note here of some of the things that are on the horizon that could obviously be very potentially market-moving events. Tuesday, October 29th, earnings from McDonald's, not really a market mover, but I wanted to mention it because we just talked about the chart. Google is going to be that evening. The next day, Wednesday the 30th, is a big one. At the close, Microsoft, Meta, and MicroStrategy. MicroStrategy is, of course, the Bitcoin play that I've been talking about for a while. It generally doesn't move that much on its earnings report because remember, its earnings report is going to be about its software business and not so much about its Bitcoin business. But I believe the stock more moves on its Bitcoin business. I am long the stock currently, and I am very, very bullish on MicroStrategy. So I did want to just include that there. Halloween is going to be another big one. Hopefully it doesn't turn into a fright with Apple and Amazon both reporting after the close. And then when we wrap up the month of October, the first week here of November is going to be very key. Obviously the election on November 5th, that's potentially a big market moving event. But also that next FOMC announcement is happening on November 7th on Thursday. And remember, this is a little bit strange, for lack of a better word. Usually it's always Wednesday. It could be because of the election. I really honestly don't know why, but this FOMC announcement and meeting has been shifted up a day, and we're not going to get the announcement until Thursday, November 7th, and that also could be a potentially market moving sort of event, all right? Last but not least, I will say, all of the plays that I gave you, be careful out there. I just want to reiterate, some of those companies are reporting. Remember, what I talk about in this program is not always indicative of what I personally do when the week is unfolding. I kind of pride myself on being a very agile trader. I change my mind on a dime, and I never stay married to any position that's not working. So just remember that. This is a show that is recorded on Friday evenings. After the market is closed, we could easily have a completely different market on Monday morning, and all of the stocks that I talked about could easily act completely different on Monday morning. So please remember that when you take all the information that I'm giving you in these videos, all right? That's all for this week. Always coming at you from beautiful Los Angeles, California. I wish you good trading and good night.